folks, and I know there's a lot of finger pointing right and left on who's really at fault here for these very dramatic swings in a very short time. And, you know, there's this one group the traders here on the floor kind of love to hate or love to put the finger pointing at, and that is the algos, the algorithmic traders, or the high-frequency traders, the so-called flash boys. We've got Vinny Viola on the phone. He, of course, founded Virtu. He's the chairman emeritus, and good to see you. We're just hitting a new low at this very moment, Vinny, of down about 674 points, 680. Yep. We may go down 700. Vinny, talk to us about the role, if any, that algorithmic traders are really having on this.
Well, let's sort of look at this in the inverse. If the stock market were up 300-400 points today in the Dow Industrial Index, would you ask me if the algorithmic traders were abiding to an up market? Think about the logic of your question.
Exactly. I know, because in the past when we talk about dramatic oil swings, everybody would say the speculators are at fault. Yeah, well, when it's going down, they blame the speculators, but not when it's going up. Is that your point?
Exactly right. Well, as you speak, right, oil is down almost 2%. Are the algorithmic traders in the energy complex getting credit for that? I think the market structure, Liz, has evolved to such a point of efficiency that let's talk about the strata of investor and purpose into a marketplace. If the average investor looked at their brokerage statement on December 31st, 2017, and added up all of the brokerage they paid for the notional amount of capital they deployed in the equities markets, and they compared that to 5 years earlier, December 31st, 2012, they'd see that the cost to exit and enter the capital markets to invest in equities is much lower, in fact, de minimis to what it once was. And at the end of the day, market structure, which has been electronified, like every other marketplace or point of intermediation across the global economy, market structure, access to our equity markets has been made enormously more efficient because of the work of automated processes as it applies to the trading.
Vinny, I'm with you. I'm with you. The smartest guys who evolve and help evolve the markets. If you're the fastest runner, you should be allowed to win. However, the naysayers would say
it's not about fast or slow, Liz. The market is so efficient at the point of buying and selling that the question of latency is not even. I mean, Except that Vinny, 5 to 7 milliseconds per round trip that you guys take in a trade versus the traders here who told me yesterday they were missing out even as they put it in thinking that they had hit the low. It was already up off the floor when they put in their buy. Can I, and I don't want to be at all disrespectful. I know so many of the traders on the floor, as you know.
Of course.
I started off on the trading floor.
Yeah,
and I don't want to be, I don't want to sound at all, even a tad disrespectful. They just need better technology. It's available to them. Virtu's on the floor. We trade as a DMM. We didn't miss any of our bids and offers. That's just not fair. It's not fair for them because, quite frankly, whomever they are, they need to get better technology. It's as simple as that. And I'm not trying to be at all.
Would that mean Charles Schwab, who deals with retail accounts, or TD Ameritrade? I mean, there is this belief that that the retail investor is getting stampeded because you guys are that first to pounce within milliseconds.
Well, no, that's not the case. Especially in Virtu's case, we're market makers. We don't initiate activity by taking a position. We're reactive. We place a bid and an offer. That's a whole other academic conversation. I would say this: any manager, any senior manager at Charles Schwab, and we've done this with T. Rowe Price at Virtu. We've done this with many of the large asset managers. It was part of our process to introduce the firm and its value proposition going public. We've actually did technology demonstrations. And quite frankly, some of those very large asset managers who were once curious about the electronic market structure are now customers and use our services and use our technology.
Well, the perception is that you guys are doing incredibly well and you're beating everybody. We've just been cycling through Virtu's stock, and it's just a 1 week. It's done the complete opposite of what the indexes have done. The indexes have plunged and Virtu has spiked. So clearly the perception is that you guys have the advantage of speed. Again, I'm a free marketeer. Nothing wrong with that. But you may have Congress breathing down your back, Vinny, and coming in with some type of regulation, because you know the government always inserts its nose into certain things.
Well, we welcome, listen, we are leaders in regulation. You know, my background is as an exchange leader and a regulator. We've always embraced regulation, and I think we've helped in any way we can to educate around these market structures. But quite frankly, Liz, I have to say I'm disappointed in you in this interview, because you know better. These markets are way more efficient. Again, the algorithmic traders, the electronic market structure, does it get credit when the market rallies? Is it getting credit today? Because oil is almost 2% cheaper, and that will be reflected in the gasoline price. It's a bit simplistic. And quite frankly, it actually adds to the uncertainty and lack of understanding as to what's going on. The market should be viewed as what it is. You had almost 300 of the 500 S&P stocks reach 52 weeks highs.
It's been an incredible run.
If I can finish my point.
And then Charlie wants to get in on this. Charlie Gasparino's here too, Vinny.
160 of those 300 are in what every technician would tell you in a corrective phase. We all know when a market's trading 26,000, a 2% notional correction looks a lot more objectively than when it's trading 10,000.
Of course.
I think that the conversation about Congress and regulation, remember, pure market makers.
Hey, I'm just being realistic, Vinny. You can be as disappointed as you want in me, but don't be surprised because I've seen it happen before, when Congress looks at something and tries to find a villain. So I'm just talking about my experience in watching these kinds of things.
Yeah. No, that's fine. I mean, again, to be very humble and respectful to the dynamic of this conversation, and also remember now, never before have investors been able to access the market with as many specific market structures and instructions.
Right.
So investors could say, hey, I want to trade at this price and only at this price. And I don't want to trade in a flat technology environment. I want to go to IEX where there's a speed bump. Well, Virtu's there as a market maker, and other market makers are there. So, I mean, again, markets are markets. They seek efficiency. And you know what? I've been at this for 32 years now, and I've seen an evolution, and I think a principal beneficiary of these efficiencies, quite frankly, in technology has been the retail investor on Main Street. And they'll tell you that if you meet them in groups.